Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with my low time frame bullish scenario where we're looking for a double 1-2 for then eventually a bigger wave 3 to the upside. In this scenario, the green count over here is the higher degree count because we're looking for a 1, 2 and then a green 3, green 4 and a green 5, and inside the green 3 we are then looking for a lower degree count, which is the blue count to the upside. Now what you usually want to see in a double 1-2 scenario is that the second wave 1 is shorter in time and in price compared to the first wave 1. But what you can clearly see is that the second wave 1 is longer in time and also longer in price, which lowers the probability of this bullish scenario. If we at least look at the retracement level of this wave 2, it retraced to the golden pocket, which is a common target for a wave 2 taken from the low to the high of wave 1. So that is quite nice, which then leaves us to the question, is this the low? Well, there are two scenarios on the micro that could end to a low over here. So let's go through them. The first one is a WXY scenario where wave W is a zigzag, X is a complex correction, and Y is a zigzag to the downside. So we're then talking about a double zigzag WXY. However, what you prefer to see is the white X to cross this trend line taken from the beginning of W to the high of wave B in the first ABC over here. And you can clearly see that none of the highs of this wave X went above this trend line, which is not great. But also, and actually more important for me, is that if we look at the wave Y target area, then the most common target area for a WXY double zigzag is around that 1-to-1 or between the 1 to the 1.236, which is far below the low of wave Y, and also wave Y didn't even hit the rare target being the 0.618, so that lowers the probabilities of this particular scenario. And the second scenario to maybe end it over here is a WXYXZ. Zigzag in W, any correction in X, zigzag in Y, any correction in X again, and then another zigzag in wave Z. In a WXYXZ, the most common target for a wave Y is taken from the high to the low of W to the high of X, which is the 1-to-1. Clearly, we can see that this wave Y didn't get close to the 1-to-1 over here. If we look for the targets of a wave Z, we take a trend-based flip from the high to the low of W to the high of this X over here, where the 0.618 is a rare target and the common target for a wave Z is in between the 1 and the 1.236. And as you can see, again, price is not even close to these targets, making it quite difficult at the moment to think that this is the low, increasing the probabilities that what we are seeing over here is still part of a corrective structure, and we'll deep dive into this in a second. If we look at the micro bullish scenario, at least the one that I'm still looking at then for a potential wave 2, so instead of wave 2 being in, we're still looking for the end of a wave 2. I'm looking at a WXY corrective structure which is not yet finished. So we then have a wave W over here. That one is finished. In a wave X, we have a complex correction, which then is a WX, W being a zigzag, X any corrective structure. And then in wave Y, we're looking for an expanding flat, which is then a 5-wave structure to the upside, an impulsive move, where I like to see this area being hit mainly because of the target area and the resistance area that I have around this level, which is sitting between 29.7k and 29.8k, which I think is a nice high as well for this wave X, for then eventually a wave Y to the downside, where as you can see, the low over here missed out on hitting this support area, and that support area is sitting around 29k to 29.1k, which has quite a nice amount of confluence. There's a daily over here at 29.040 as well as a naked point of control at 29.050, so it's quite a nice support area for then wave Y, which is also the 786 retracement, Fibonacci retracement level taken from the low to this wave 1, because on the low time frame this is a 1-2, right? That's what we're looking for then a push towards the upside. Now if we then go towards the bearish scenario and we zoom out just a little bit, then first of all I like to mention that the invalidation of this scenario is the high, just as by the way with the more like let's say bearish scenario in a bullish scenario 1212 for eventually a 3 to the upside. If price takes this high, then this scenario is invalidated and I don't expect a wave Y anymore. And also in the low time frame bearish scenario where we are looking for a move to the downside, the invalidation is price taking this high. But in this particular scenario, what we are looking for is a impulse to the downside. So this is the high and we're now looking for impulsive structures where a wave 1 was then a diagonal to the downside. Very nice indeed. Looking for a wave 2. Most common target area for a wave 2 is between the 0.5 and the 0.786 Fibonacci, taken from the high to the low of wave 1. Price just now while recording hit the 0.5 very nicely, but you can see that golden pocket is in confluence with that resistance area over here, which for me is a very important level and very interesting level indeed. However, what you can also see is a fib time on the chart, and this fib time is taken from the high to the low of this wave 1, with wave 1 then being a leading diagonal in a 1, 2, 3, 4, 5 wave move. Usually, and by far most commonly, wave 2s or any corrective structure is ending after the 0.382, and you can see that where price is now in the 382, there's still a big gap. The 382 is currently sitting on the 16th of August, 4 a.m. in the morning, Central East European time. So we still have a little bit of time to go, and that is the reason why in a second I'll show you another scenario to finish this wave 2 after the 0.382, where this is only the beginning structure. But nonetheless, if price moves to the upside, as price just crossed this resistance area over here, where we also had a daily naked point of control, and on the lower time frames you can actually see it was a nice support resistance flip, resistance, move down, then crossing the daily naked point of control, and then ups towards the upside, now against the 0.5 fib. If we then zoom in to what I'm actually looking at, then this is a scenario I currently have in mind for this micro bearish scenario, for eventually more downside. So what we're then looking for is this to be a wave 1, then a WXY in a wave 2, for then a bigger 3 to the downside, meaning that the move that we have to the upside at the moment is a zigzag, and then a 5, 3, 5 wave move where the target area for wave C is very nicely positioned around again that same target area, which is around 29.7k for then the high of a W, then a potential X to the downside, and an X is most commonly a zigzag. It can be any corrective structure, but most commonly a zigzag for potentially another 535, and then inside wave Y an expanding flat where you then have a 3-wave structure, a 3-wave to the downside, hitting this support area over here around 29k, for then a 5-wave move to the upside, take the high of W, maybe even around the 786, and then move to the downside in a bigger wave 3. Now this is very advanced counting, very hypothetical of course, but this would be a great scenario to first of all end the corrective structure of a wave 2 after the 0.382, but also you immediately clear up the support area that we have here for when price comes down. This support is very unlikely to hold. So you go up, down, take the support, move up once again, and then down. I think that scenario is very interesting indeed. And if we then look more locally, this is exactly what we have been looking for since the previous video. I drew it on the chart as well. Screenshot from the previous video. We were looking for an A, B to the downside, where I said I would love to hit some of these fibs because at the moment price didn't even hit the 382, which is a minimum target for both a wave B and also a wave 2, but the 382 level is more common for B compared to a wave 2. And what we see, price move to the downside over here, finding support on the 0.382, which I'll repeat is a common target for a wave B, but a rare target for a wave 2. That means that the move to the upside has currently a higher probability of being a wave C compared to a wave 3, even though the volume, something to keep in mind. Also, the most common target area for a wave C is taken from the low to the high of A to the low of B, which is between the 1-to-1 and the 1.236, and you can see that 1.236 very nicely positioned inside that blue target box, and also the rare target for a wave C is above. So even if price is going to range inside this area just above the 1.236, that is absolutely fine, no problem at all. Now if you look at the CVD divergences, I opened the folder, but as you can see, it's pretty empty. So let's go to the chart because there's not too much going on. We didn't have any CVD divergences with the actual low over here, like a higher low in price, lower low on the CVD. What you could potentially see, which is a little bit cheeky, is with this order block over here, you had a higher low on price, but a lower low on yellow. And you can now see, if you look at my horizontal cursor line and you look to the right, and you can see the little dip of the yellow line below the horizontal cursor line. Yeah, that is the bullish CVD. Very cheeky, very local as well. And instead of with the low, it's with an order block. You know, you don't that's a bit difficult to read, I suppose, and it was also only one candle before the move to the upside, but it was at least on the chart. It was visible, which is a alleged CVD divergence, I suppose, but preferably you're going to get them with the actual low. Those are the most trustworthy. But then at least now we're moving towards the upside and everything is neutralized, so we wait and see. And if we then finally look at the probabilities of the different scenarios that I mentioned, then currently if we look to the low time frame, well, low time frame wise, I'm still looking for a wave 2, or at least I am still looking probabilities from an Elliott Wave point of view, because it's not about what I want but what Elliott Wave is showing us. From an Elliott Wave point of view, the probabilities at the moment are higher for this to be part still of a wave 2 for then a wave 3 to the downside, as explained with the bullish scenarios being less probable as explained. On the micro, what I'm looking for, and actually low time frame, this is the scenario I keep an eye on at the moment, right, as explained. And then on the micro, well, we just hit the wave C target area, so I'm looking at this to be an ABC. I do think it's nice to see price moving up to that 29.7k area, and then we observe the reaction over there. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.